When people hear the phrase financial ownership, it often sounds vague. Some think it just means bookkeeping, others think it means tax planning, and some assume it's just having a CPA. But financial ownership is not about tasks, it's about responsibility and it's about accountability. In this video, I want to explain what financial ownership actually looks like in practice inside a real business. So, what financial ownership is not? Most businesses operate with fragmentation. They have a bookkeeper handling the books, a payroll provider running payroll, and a tax person who shows up once a year. On paper, everything looks covered. Each person is doing their job, but when something breaks, cash flow, job profitability, tax surprises, no one owns the full picture. Question starts bouncing. The bookkeeper points to the payroll points to the taxes says they will look at it later, and the owner becomes the coordinator. That's not financial ownership. That's fragmentation with stress. Financial ownership means one person is accountable for all the numbers connected, not just that tasks are connected, but the books, payroll, cash flow, and tax readiness actually align. Ownership means someone is watching the system, not just reacting when there is a problem. So, what financial ownership looks like month to month? In practice, financial ownership shows up in few very specific ways. First is ongoing visibility. The books are reviewed regularly, not just reconciled but understood. Issues are caught early before they turn into surprises. Second, payroll coordination. Payroll is not just processed, its impact cash flow is understood. Hours, timing, and payroll expenses are reflected accurately in the books. Nothing feels disconnected. Third, tax readiness. Taxes are not treated as a once a year event. Estimated payments are planned. Major decisions consider tax impact before money is spent. There are fewer I don't expect these moments. And finally, single point accountability. When a question comes up, there is one person responsible. When a notice arrives, there is one person handling it. The owner is not chasing people or stitching answers together. The biggest difference owners notice is not better reports, it's fewer surprises. So, what changes for the business owner? When financial ownership is in place, the business does not suddenly become perfect, but it becomes predictable. Owners stop guessing, they make decisions with more confidence. They spend less mental energy worrying about what they don't know, and that clarity creates calm. Not because the business has no challenges, but because the financial side is actually owned. Financial ownership is not about doing more work. It's about having one person accountable for how the financial side of the business actually works together. That clarity changes how a business feels to run.